Hey everyone, and welcome back. Now we only have 6 days until the Fed has their next meeting on potential rate cuts. Now this could be something that is very important to the crypto market overall as far as kicking off the next bull run. Obviously, as we have seen in the past, the crypto market is very highly impacted by interest rates. Usually when interest rates are higher, this is a worse thing for the crypto market, and when they're lower, it is potentially a better thing for the market. So we only have 6 days until we get some sort of clarity on what's going to happen. And so we're going to talk a little bit more about kind of where things stand from a rate cut perspective a little bit later on in the video. But starting out, I wanted to go into crypto bubbles. So looking at crypto bubbles, we can see a pretty overall green day. Obviously, we have a couple reds here and there. But overall, I mean, we've got WorldCoin and Beam and Near and Sui. Like, we've got some pretty big gainers overall. PopCat, another one. Meme coins have been hit pretty hard, so the fact that PopCat's jumping back is I would say pretty good overall. Another thing that is pretty important that we can now see is hourly, daily, weekly, monthly, and yearly are all green. So I know there was a decent chunk of the past about month or so where the month and the year particularly were both red, and oftentimes even the week as well. So, we are still sitting in a pretty good spot depending on how long you've been holding. Maybe if you got in March or April, maybe things aren't looking as great for you so far. But overall, the market is still showing to be at least relatively healthy overall. So that is good news. Also, we can see this looking at fear and greed. We are still sitting in fear, which is kind of interesting to me. To be completely honest, I would have figured we'd be jumping back into neutral at this point, just because we can see, if we close this timeline in a little bit more, we have seen a bounce up back from some of the lows we saw over towards the end of last week, I guess middle of last week as well. We've jumped up past that. We are looking relatively stable, I would say, within the market. And so this to me just feels like there's too much fear that may not necessarily be warranted. To me right now, the market seems, at least it feels like it should be in a more neutral state. I do think it's very undecided. I would not at all say that the market is currently acting in a bullish way, but I do think it's not necessarily acting in a bearish way either. It's just kind of neutral, right? Go figure. So I do think this is still a bit of an overreaction on the market's part. I do think neutral does seem to make a little bit more sense, but obviously I don't make the rules. This is just what we're seeing on the fear and greed index. So the next thing I want to take a look at, this is also a pretty big change as well, is we are finally technically out of Bitcoin season. Now, a lot of this, I think, we can see is due to the resurgence of some smaller altcoins, particularly within the AI and DePIN sector. We've seen a lot of pretty impressive gains over the past week or so from those, where Bitcoin is kind of held steady. It's come back a little bit, but overall, it's held fairly steady overall. Moving on, I wanted to look at the Bitcoin chart from a much larger perspective. We're kind of zooming out here. So as we can see, at the beginning of 2024, we were opening at about 42,000. We are now currently sitting at about 58,000. So, overall, the year has been good so far. We have been essentially, since about the beginning of March, we've been sitting in this downward channel. We did see the price actually dip back in to this accumulation zone of kind of that 50 and a half to like 52,500 range. We obviously did very quickly bounce back up. We are, at least what I would consider, sitting right close to the middle of this downward channel. We're not quite at the halfway point yet, but we still definitely are at the lower half. I do think it is possible that maybe we'll either bounce off this midpoint line and maybe come back down again, or potentially maybe we will even see some running above and then coming back down. I do think it is possible that we do see a run up and then maybe a bounce off of this upper trend line because of the rate cut news. But again, we'll get into that here in a second. But overall, Bitcoin is sitting in a much healthier spot than where we were obviously down at the bottom of this channel. So as we can see, this is on Margex. I do pretty much do almost all of my charting on Margex now because I have been trading here somewhat consistently lately. I haven't been doing too much trading. Obviously, as we talked about on the channel, I was doing quite a bit of longing here, but I mean, basically all my longs have been since closed out. And since we are kind of at this midpoint, and like I said, I do think it is pretty likely that we can come back down as well as kind of maybe come back up and bounce through. this is something that, I'm not necessarily trying too hard to trade on, just because, especially when you're trading with leverage, it can be a very, very dangerous game, and I'm not trying to get burned. So if you are interested and do want to trade on Margex, though, please do go ahead and use my link below to sign up. Margex is doing $10,000 in referral bonuses, as well as they are still doing that $500,000 Casper airdrop that goes until, I think, almost the end of the month. So you do still have some time there to go in and get some volume if you are interested. But overall, like I said, we are still playing the market on hard mode at this point. Be very, very careful if that is something you do decide to do. There is a bit of a learning curve, so if you want to get involved, just make sure you're being careful and being responsible about it. But so anyway, I did actually want to go back to TradingView, because this is a chart that I could not quite necessarily chart out on Margex. And so what we're seeing here is I guess this red line or magenta line, whatever we want to call it. This is the price performance of Bitcoin from, I think we start at December 31st. Yeah, so we're starting at December 31st. So this is basically the year-to-date performance of Bitcoin and the entire rest of the crypto market, excluding Bitcoin. So as we can see, towards the beginning of the year, the returns running all the way up until about mid-March were pretty close as far as just, Bitcoin versus the overall market. They were all sitting at, roughly like, 50-ish%, varying obviously, at different points in the cycle. But as we've been able to see kind of over this summer lull, this gap has started to widen, right? To a point right now where the gap is actually pretty large, where the altcoin market overall is sitting up about 9%, where Bitcoin is sitting up about 38%. So we obviously have seen alts bleed far more than Bitcoin comparatively, which I do think makes a lot of sense. Obviously, the whole entire year, or almost the whole entire year, Bitcoin has had the benefit of institutional interest with the ETFs going live on, I believe it's January 10th. And so, there has been a ton, very substantial institutional interest in the Bitcoin ETFs, which I do think is a massive aid when we're looking at this. Also, we are in Bitcoin season. As you've mentioned before, Bitcoin usually does lead the market. I guess technically we're out of Bitcoin season, but it's still definitely very much like Bitcoin season focused. And Bitcoin usually does lead the market. So obviously, as Bitcoin is going up, we would expect it generally to go up more proportionally than the rest of the overall crypto market, which we are seeing. Again, if past cycles are to be believed, we would imagine this gap start to close as Bitcoin kind of finds its high, and then the rest of the alt market starts to run. Again, we don't actually know if that's going to happen. That is what's happened in previous cycles, but we don't actually know if that's going to happen in this one. So again, take that with a grain of salt. Obviously, you can use it as a guide, but don't let it make your decision for you. So just make sure that you're staying responsible and reasonable with this type of stuff. Going on, here's where I wanted to discuss kind of the Fed interest rates, what that means for Bitcoin, and what we could see both short-term as well as long-term. So as we can see, almost a 70% chance of 0.25% of rate cuts, about 30% chance of about 0.5% of rate cuts. I think this is kind of in line. Well, I think the market is almost certainly priced in 0.25%. 0.5% I think there's probably a level of maybe preparing for that being priced in, but it's not maybe necessarily inherently priced in. I think we're focused more on the 0.25% at this point. What this means, though, short term, in my opinion, is the market is expecting rate cuts to start. So seeing any sort of bump from Bitcoin, I think, is possible in order to essentially wreck people and wipe leverage. I think people might be trying to trade the news that it could be happening. But overall, people already pretty much know this is going to happen, right? So, when we get to September 18th, which again is in 6 days from now, when we get to September 18th and they announce that they're cutting rates by 0.25 point, I don't expect to see Bitcoin legitimately go crazy, right? I expect to see maybe some level of bump. Again, I don't expect it to be a sustained bump. Just, I would imagine it's to wipe leverage pretty much, and that's about it. But then we can, essentially see it come back to where it is and all that type of stuff. If we cut by 0.5%, I think there's two things that could happen here. It goes up or it goes down. Wow, obviously, right? But why, I think, is important. So if Bitcoin goes up, I think that would be a general optimism that rates are being cut faster, which gets us to a lower percent or a lower interest rate environment than what we've seen currently. However, I do think there is a very likely and possible kind of other side to that coin, which would be if they cut too fast, that could signal a general sense of worry from the Fed, and more worry than maybe what people were initially expecting, because they are cutting rates faster than what was maybe essentially expected. right? And if that happens, that could essentially throw us into a fear-based market of, oh, well, the Fed basically knows we're going into a recession, and so now we all need to sell everything because a recession is coming. So I do think that is an equally and possibly even more likely outcome than things going up, just because we are still very skittish. The market overall is very scared about the fears of a recession, and then obviously that bleeds into the crypto market more widely as well. So the last thing I wanted to look at that kind of coincides with this possible theory that I have is an article from BlackRock. And so this is on Forbes, but BlackRock is essentially issuing a warning saying, we see multiple factors driving market volatility: resurgent recession fears due to some softer economic data, pre-US election jitters, and profit taking as investors make room for new stock issues. They also said, we don't expect to see the Federal Reserve cutting policy rates as sharply as the markets expect. Now, this is interesting because so there's a couple things. They go on to then mention that they don't expect to see market rates being cut as quickly as people expect because the Fed is trying to play this dance, right? And the dance is, obviously the market is starting to show some signs of slowing down and wear, which obviously would lead to cutting interest rates. The other problem, though, is there still is a fundamental issue that inflation is high and inflation is not stopped, and that's generally because of a strong labor market. And so they're trying to walk this very fine line of, well, they can't cut rates down to zero because if rates go down to zero, then inflation is going to rocket again. But they also can't not cut rates because if they don't cut rates, then it's probably going to result in a hard landing with a recession. So they're trying to walk this very careful line between cutting rates, but not cutting rates too hard, but also not cutting rates too soft. And so this is causing a lot of speculation and uncertainty within the market, which again, that ultimately all leads to volatility because people aren't aware exactly of what's going to happen, right? And so I think BlackRock is taking a more measured approach in the sense that, I think people are expecting a lot of what we've seen in previous rate cutting cycles, where the Fed essentially cuts rates down to zero or almost zero, and then money becomes free again, right? And I think what BlackRock is saying here is, I don't know that they're necessarily expecting that because I don't think they see the cutting of rates down to zero as a possibility. Like, I just don't even think they think that's something that they can do. So that's an interesting take by BlackRock. Obviously, if the sentiment for cutting rates does start to drop, this could definitely be bearish for crypto, because I think a lot of people are looking forward to those rate cuts because that's usually what brings a lot more speculation and volatility and volume back into the crypto market. And so if that doesn't happen, then that could potentially be a bad thing. Also, Bernstein released an article, I think 2 or 3 days ago, saying essentially that if Trump wins, Bitcoin will go to $90,000, and if Trump loses and Kamala wins, then it'll go to $30,000. Again, I think that's a bit of wild speculation. Obviously, I think it goes without saying that Trump is the more crypto-friendly candidate. However, it does seem, they may, as superficial or not as they may be, it does seem that there has been some sort of general outreach by the Kamala Harris campaign toward crypto investors and crypto people generally. So maybe it won't be as bad. I certainly don't think it could be as bad as it is currently, but only the future can tell what will happen there. So ultimately, if you found the information in this video useful, please do give me a like and subscribe. It really does help me out. Also, if you have any comments or want to interact with me, anything like that, just drop them in the comment section. I do read and respond to all of my comments. That would be a great way to get in touch with me if that's something that you're wanting to do. Otherwise, thank you for tuning in, and we'll see you in the next video.